Hey, everybody. I want to talk about some of my favorite value stock ETFs to buy right now. Growth stocks have really had a great run over the past, and it wasn't just in the 2021, 2020 COVID boom for all these tech companies. Growth stocks have been outperforming value stocks consistently for well over a decade now. That ended in 2022. Value dramatically outperformed growth, and I think that could just be the beginning. But if you're not sure where to start, there's no harm in going the ETF route. You can get growth and income in your portfolio, invest in some great value stocks without having to pick and choose individual companies and asset allocations. So, four of my favorites, and the first three are pretty basic. They are just kind of the biggest difference is the size of the companies they invest in. So, first and foremost, the Vanguard Value ETF, ticker symbol is VTV. This is the biggest value stock ETF. A little over $150 billion in client assets are in this. It's also the cheapest with a 0.04% expense ratio. That means for every $10,000 you have invested, your investment expenses are just $4 a year. The current dividend yield on this one is 2.6%. Value stocks are more likely than growth to pay dividend. So ETFs pass through the dividends their companies pay, and that's why you have a pretty nice dividend yield there. And this is a large cap value ETF. You can see the top five companies held by the Vanguard Value ETF are Berkshire Hathaway, ExxonMobil, United Health, JP Morgan Chase, and Procter and Gamble. So if you want just names that you'd recognize but aren't sure which ones to pick, the Vanguard Value ETF is a great way to do it. Next is also by Vanguard, the Vanguard Mid Cap Value ETF. Ticker symbol is VOE, slightly smaller ETF and a slightly higher expense ratio, but 0.07 is still rock bottom when it comes to ETF fees. Similar dividend yield, 2.4% as I'm saying this. And this is an index of mid-sized value stocks. So you can see the top five companies on your screen right there. If you don't recognize all of them, that's kind of the point. These are stocks that are still smaller and might actually have a more growth potential than the bigger value stocks, but still have a lot of value characteristics like mature businesses, profitability, dividend, consistent dividends, things like that. So that's the Vanguard Mid Cap Value ETF. And my favorite small cap value ETF, if you want to kind of invest in some more up and comers that have a lot of long tailed potential, but are small companies that have a lot of value characteristics, the SPDR S&P 600 Small Cap Value ETF, ticker symbol SLYV. Total assets are $4 billion, so it's considerably smaller than the first two. A 0.15 expense ratio is the norm for a fund like this. 2.5% dividend yield right now. And this is the value stocks in the S&P 600 index. If you're not familiar, the S&P is broken up into a few different categories. You have the S&P 500, which is the large caps. You have the S&P mid cap index, and then you have the S&P 600, which is the small caps. You can see a home builder in there. Signet Jewelers is a company that you might be familiar with. Essentials Properties Trust is a real estate investment trust. So a lot of companies that you probably haven't heard of in both the mid and small cap value ETF. And that's really the point there because it allows you to get exposure to some of these value stocks you may not have heard of or may not be familiar enough with to invest on your own, but they could make great additions to your portfolio. And last but certainly not least, this one's not really a very standard value ETF, but it's one that I really like. The JP Morgan Active Value ETF, ticker symbol is JAVA, Java. It's an easy symbol to remember. Pretty small ETF at $341 million in total assets. It has a 0.44% expense ratio, significantly higher than the others on the list. But this is an actively managed ETF, unlike the other ones that simply track stocks in an index. This one actually has a team of investment managers that try to find attractively valued companies and allocate your money as they see fit, not as an index tells them to. So the expense ratio is higher because you're paying managers. That's actually a low expense ratio for an actively managed ETF. And you can see the top five that their managers have picked for this fund are Wells Fargo, Bristol Myers Squibb, ExxonMobil, Berkshire Hathaway, and AbbVie. So they have a lot more freedom when it comes to allocating their portfolio, and you're going to pay for the privilege. But if they're right and these are really deep value investments, then it could pay off tremendously in the long run. So hopefully you found that primer on those four value ETFs interesting. I would love to hear any questions or thoughts you might have. Put them in the comments, and I will do my best to address them individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.